Iraqi Dinar today. Something significant has surfaced inside the world of high-level banking, and it deserves your full attention tonight. Picture a major international financial institution quietly developing specialized guidance for a carefully selected group of wealthy clients. This is not gossip circulating on social media. This is not wishful thinking from online forums. This is structured, formal preparation being built inside a real banking environment, tied directly to conditions surrounding the Iraqi dinar. That single fact raises serious questions worth exploring. Why would a globally recognized financial institution dedicate legal resources and compliance hours to building formal procedures around a currency that many still dismiss as speculative? The answer to that question tells us far more about where things stand than any headline ever could. Stay with me through this entire discussion, because tonight is not about predictions or promises. Tonight is about understanding how powerful financial institutions actually behave in 2026, and what it truly means when one of them begins preparing behind closed doors. The gap between preparation and activation may be the most important concept any dinar holder can understand right now. These are two completely different things, and confusing them leads to either false excitement or unnecessary disappointment. We are going to break this down slowly, clearly, and with the discipline this topic demands. If you have been following this channel, you already know that Iraqi Dinar today does not deal in fantasy. We deal in structure, systems, and verifiable institutional behavior. So when credible signals emerge from inside the banking world, we study them carefully rather than amplify them emotionally. Major banks do not prepare formal documentation because of excitement. They prepare because their internal risk divisions have identified a scenario worthy of operational readiness. That is a meaningful distinction, and tonight we are going to unpack exactly what that means for everyone watching this space. Do not go anywhere. Drop a comment below and tell me what questions you want answered tonight. Hit that like button right now so this analysis reaches more people who need it. Let us ground this conversation in how major banks actually function. Institutions operating at the global level do not build internal compliance frameworks because of chatter in online communities. Every single document produced inside a Tier 1 bank passes through multiple layers of review before it ever reaches a client. Legal teams examine it. Risk modeling departments test the assumptions behind it. Liquidity analysts calculate what capital would be required if the scenario inside that document became real. Compliance officers verify that every step aligns with international banking law and regulatory expectations. This is not a fast process. It is not a casual one either. When a bank with global reach begins constructing structured access procedures tied to the Iraqi dinar, that project had to receive internal approval. It had to compete for budget. Leadership had to sign off. That sequence of events alone tells us something important. The topic has crossed from informal observation into formal institutional review. That is not a small step. That is a significant institutional signal. In 2026, the global banking environment is more tightly regulated than at any previous point in modern financial history. Banks operating across international borders must satisfy strict capital adequacy requirements, maintain liquidity coverage ratios, comply with anti-money laundering frameworks, and answer directly to central banking authorities. They are regularly audited, continuously monitored, and periodically stress-tested by the very regulators who oversee their operations. Tier 1 banks carry an even heavier compliance burden. These institutions settle transactions directly with central banks. They maintain correspondent relationships spanning dozens of countries. They hold capital buffers designed to absorb significant financial shocks. When a bank at that level moves deliberately on any currency-related procedure, the movement is calculated, not spontaneous. It is based on risk assessment, probability modeling, and operational logic. This is why preparation inside a major bank carries weight. It does not represent confirmation of a rate change. It represents a measured institutional decision that readiness is justified. And in the world of global finance, justified readiness is never accidental. Share this video right now with someone who needs to hear this analysis. The information tonight matters. Now let us talk about what structured access preparation actually looks like from the inside. When a major bank builds a formal framework around a currency access event, that documentation typically contains several distinct components. Understanding each one helps separate institutional logic from emotional interpretation. First, identity verification protocols. Under strict Know Your Customer regulations, banks must confirm exactly who they are dealing with before any transaction of significance is processed. This is non-negotiable in 2026. Every qualifying client would need to satisfy enhanced identification requirements before moving forward. Second, source of funds documentation. Anti-money laundering laws require financial institutions to understand the full origin of any assets involved in a transaction. A bank cannot simply accept currency for exchange without understanding where it came from and how it was acquired. This layer of documentation protects both the institution and the client. Third, eligibility criteria. Not every account holder qualifies for every type of financial transaction. Banks establish internal thresholds and client classifications that determine who can participate in specialized procedures. Wealth management clients with established relationships would likely be prioritized in any structured rollout. Fourth, liquidity coordination planning. If a currency event were to occur, the bank would need immediate access to settlement capital. That requires advanced coordination with correspondent banking partners and potentially with central banking infrastructure. None of that can be arranged overnight. It must be modeled, tested, and confirmed well before any public announcement arrives. None of these components predict timing. None of them confirm that an exchange window is open or that a rate has been officially adjusted. What they confirm is that the bank has thought through the operational requirements carefully enough to document them in formal language. That level of internal discipline reflects genuine institutional seriousness. For those watching this space, the presence of such documentation should be read as a signal of measured probability, not guaranteed outcome. Banks prepare for scenarios that cross a certain risk threshold. Crossing that threshold means the possibility is real enough to justify structured planning, even if activation remains uncertain. If this breakdown is helping you think more clearly, hit subscribe right now and keep this analysis coming every week. Let us now examine the broader financial landscape surrounding Iraq in 2026, because institutional preparation does not happen in isolation. Banks monitor macroeconomic conditions, regulatory reform signals, and policy language from international bodies before committing resources to any internal framework. Understanding what is happening around Iraq helps explain why global institutions may be paying closer attention right now. The Central Bank of Iraq has been actively pursuing modernization across multiple fronts. Digital payment infrastructure has been upgraded. Compliance systems have been strengthened. Cross-border settlement capabilities have been expanded. These are not cosmetic changes. They represent genuine structural improvements that increase Iraq's compatibility with international banking standards. When a country upgrades its financial architecture in meaningful ways, global institutions take notice. They update their internal models. They reassess risk classifications. They revisit scenario frameworks that may have previously been set aside. Beyond domestic reform, international coordination plays a significant role. Organizations such as the International Monetary Fund and the World Bank provide advisory frameworks that influence monetary policy direction across developing economies. While these institutions do not directly control exchange rates, their engagement with a country signals confidence in its reform trajectory. Banks that operate globally monitor this engagement carefully. When multilateral attention increases around a particular economy, internal scenario modeling inside major banks tends to expand accordingly. Iraq's economic position is also closely tied to energy markets. Oil revenue stability directly affects fiscal flexibility and monetary policy options. Stronger revenue conditions over sustained periods can create room for policy adjustments that previously seemed out of reach. Banks feed these macroeconomic indicators directly into their forecasting models. Rising fiscal strength does not guarantee a currency policy shift, but it does increase the statistical probability that planners assign to certain scenarios. And when probability rises past internal thresholds, preparation follows. This is the environment in which structured Iraqi dinar access guidance would be developed, not in a vacuum, not based on speculation, but as a rational institutional response to a combination of reform signals, macroeconomic movement, and international engagement that collectively justify operational readiness. Comment below right now and tell me what aspect of this story you want me to go deeper on next. Your questions shape this channel. Let us bring everything together and address what this all means for those who have been watching this space with patience and discipline. Tonight we examined something genuinely significant, not a rumor, not an emotional headline, a measurable signal of institutional behavior that deserves calm, structured analysis. When a major global bank invests legal hours, compliance resources, and internal approval processes into building formal access guidance tied to the Iraqi dinar, that action carries weight. Banks do not waste resources. Every internal project competes for leadership approval and budget allocation. The fact that structured preparation exists at all means the topic has moved beyond online speculation and entered formal risk review channels inside one of the world's most regulated industries. That transition is meaningful, regardless of timeline or outcome. Preparation does not equal activation. A compliance framework does not confirm a rate adjustment. An internal access protocol does not mean exchange windows are open today. What it does mean is that at least one serious financial institution has determined that readiness is justified. In global finance, justified readiness is built on probability modeling, regulatory observation, and structured risk assessment. It is never accidental, and it is never casual. For everyone holding Iraqi dinar in 2026, the correct posture remains steady observation combined with realistic expectations. Watch policy language from the Central Bank of Iraq. Monitor reform progress and international engagement signals. Pay attention to how global institutions adjust their internal positioning over time. These quieter movements often carry more substance than bold public announcements. Real financial shifts tend to be procedural long before they become visible. Paperwork precedes press releases. Internal frameworks are completed before public statements are issued. At Iraqi Dinar today, our commitment remains unchanged. Clarity over hype, structure over emotion, verified institutional behavior over dramatic assumptions. We will continue monitoring developments, analyzing signals, and delivering grounded analysis throughout 2026 and beyond. If tonight's breakdown gave you genuine value, please like this video, share it with your network, and subscribe so you never miss an update. Drop your thoughts and questions in the comments below because this conversation is far from over. Stay steady, stay informed, stay disciplined,